Hello, traders. We're going to take a look at the similarities between right now and 2020 and how eerily similar the setup is. It's basically, we call this fractals when similar price action, similar behavior repeats itself. And it can happen across different time frames. So on your left is the S&P 500, on the right is the Dow, and the backdrop here is a bull market. Things got really overbought in March. We got a little correction, and then we break out to new highs. But with the Dow Jones Industrials, it's ever so slightly. I mean, it just barely broke out to new highs. You can almost call this a double top, right? This was more. It was clear that this was a break to new all-time highs. This is it just ever so slightly bled higher, looking more like a double top. That essentially means no confirmation. The last time we saw this was here in 2020, where the S&P made a clear new high, and obviously I'm talking about this. But look at the Dow, no new high. It was a double top. So that was a lack of confirmation, which then led to the COVID crash. Of course, I'm not saying that will happen because the market doesn't crash twice for the same reason, but that doesn't mean we can't get a 10% drop from here. So, again, another reason things are looking very similar is if you look at all the vaccine stocks, they've been flying. Some of them, especially the smaller ones, even Moderna now, it's up 50% year to date, and from the bottom, from the lows of November, it's more than doubled. So something is getting priced in. I'm hearing a lot about bird flu and stuff on the news, and so again, all of this is adding up to a very similar fractal playing out, which is telling me uh, we should be prepared because it's not like the market is looking very bullish, right? The market by itself is looking like it's topping out. I mean, there are all sorts of signs saying that the market is topping out and we should be very, very, very cautious. And me personally, I'm shorting the market here. I think we can see these topping candles forming. You see that Doji, we get some negative confirmation last week. And then Dow itself, I mean, it's going down hard. Look at that, 2.5%, and then another percent. So these signs, this price action is not looking good. And if the Dow is underperforming, then that usually means the economy slows down. And with tech outperformance, that's the whole. All of these things combined to say um, things like lockdowns and all of that. Maybe they're getting priced in because all of this happened last time, right? I'm just going by what happened last time. Look at how the S&P dropped, right? From the top, it fell about 31%, and the Dow fell 35%. So it underperformed. It underperformed while it was going up, and then it underperformed on the way down. And with Nasdaq, it's even the ratio is even more obvious, right? Because this whole um, setup was led by the Nasdaq outperforming. You can see this, right? While the Nasdaq clearly broke out to new highs convincingly, the Dow just made a double top, which is the very same thing that's happening right now. Look at this clear breakout to new all-time highs. Dow is not really confirming, right? So that meant, and then even on the way down, look at the crash. The crash was like 25 versus this was 35%. So that was because all the digital stocks and all of that are beneficiaries of lockdowns. So, I mean, that's what the charts are saying, right? You can pick any, like for example, look at mRNA, right? Just look at this stock. It bottomed out here in November. It's more than doubled since then. It's had a correction. So what is getting priced in, right? Why are these vaccine stocks flying? All the little ones as well, they have double, triple, quadruple, I don't know, some big amounts. So, it's definitely something to be cautious about. What is getting priced in that we will find out about 1 week, 2 weeks from now. All right. Please leave your feedback. I highly appreciate it. Thank you.